Morning all, welcome to Monday morning. Freezing here in Sheffield. I'm in Yorkshire, have been for quite a long time, but happily I'm getting out of here and I'm going to go back and live in Thailand in about 10 days. So I couldn't be happier. The snow here making me realise I've made the right decision. Okay, stock markets. Well, what a day, Friday. So when I made my video in the morning, it did look like the stock markets were going to fall. I did talk about the head and shoulders patterns. Um, this this happens quite often actually. You'll see the price leading the news. Now, how can I explain this? So I'm a technical analyst, so I believe that price is the most important thing. Basically, what I think is that it's not possible for every trader to absorb all the information that is out there, political, or geopolitical, economic, whatever. You just can't medical at the moment. No one person can absorb all the information that is out there and then process that and apply it to market pricing. So my theory is that technical analysis, the news is already in the price. The news is constantly already in the price because market participants have access to all the same information and they can process it and then react upon it. So whatever the price of of whatever commodity or asset is at the moment, that already reflects basically all the news that's out there. These days, when I first started trading, well, on the trading floor in 1987, of course, we hardly had any news anyway. We were the last to hear about what was going on. Then things went a bit more digital, but even then, even when we came off the floor and we were trading in an office, we didn't. Not everyone had access to Bloomberg or Reuters. Those were paid subscriptions. So anyway, these days, I think retail traders have almost as much access to news as professional traders. So this is my theory. Now, for me, stock markets were already poised to go lower. So it doesn't matter what the trigger is. The trigger happened to be a new variant. Now, I've seen times when news about COVID or whatever comes out and the market doesn't really react. So my theory is that the market was already poised to go down and it just reacted. The trigger was this new strain of virus. Anyway, these are my theories. So once the S&P broke the neckline to the head and shoulders and hovered, then of course we came down, got close to our measured target. Now we're bouncing back. So for me, this is resistance up here. Let me do my crosshairs. There we go. So the sort of 45, 46, 55, 65 area is strong resistance. We may not get there. Although price often retests the neckline to the head and shoulders, it doesn't always get there. So for me, pressure is to the downside now, purely because of this head and shoulders pattern. We also had that huge bearish engulfing candle on the daily chart. Well, not so big on the S&P, although we did have it. We had it a bigger one. Well, it was the Nasdaq, which was the mega. Let me just take these fibs off now. They're not particularly relevant. So it was this huge bearish engulfing candle here that was particularly negative for the Nasdaq. Now, then we had this head and shoulders pattern: shoulder, head, right shoulder, break of the neckline. Now, however, the market has bounced back, so I'm wondering now whether this will be a bigger head and shoulders pattern. You do get head and shoulders patterns within head and shoulders patterns. I think I've explained this to you before. I'm going to just put this ray here. Now, this could be a much bigger pattern building. Can I get it? There we go. Okay, not quite. Anyway, you get the picture. Let me actually, I need to do this properly, and I need to blow it up because my points are magnetized to the low. Sometimes when I scrunch the chart up too much, it can't identify which low I'm looking for, so I have to do that. Right, now then. So is this yet another head and shoulders pattern, and a much bigger one, so therefore much more significant? Could this be a left shoulder? This could be the head. This could be the right shoulder. Now, the right shoulder doesn't have to be symmetrical. It doesn't need to be as big as the left shoulder, although it can be. So as you can see from the 1 hour chart, we've got moving average crossovers, which are quite negative for the Nasdaq. 100 crossing below the 200, 50's already crossed below both of them. We're trying to hold above the 500-hour moving average. Don't know whether we will. We're kind of easing back again. I've even got probably a negative trend line here. Yes, I think I have. Okay, so we haven't quite got to that one. But anyway, so the outlook is quite negative. We are in a short-term bear trend. We could be building this head and shoulders pattern in the NASDAQ. So a break below 15,990 would be the next sell signal. And that could send us down by 15,990. What's the peak there? Okay, so we're talking about 800 points or so. I'll deal with that in the projected target if it happens. Dow Jones already has completed a very nice head and shoulders pattern. Now, when I was speaking to you, I think it was when I was speaking to you on Friday morning, I was talking about the break of the head and shoulders neckline, if I remember correctly. Anyway, it broke. Yeah, I think it was here I was talking to you about this, and it broke immediately, or I think it was even breaking as I was speaking to you. And anyway, the market has collapsed. So, again, let me just put my ray on here. Neckline. Oops. Oh, come on. All my candles are too close. That's the problem. Delete that one. Okay, get my ray and put it on here. There we go. Okay, so for the cash index, if we get anywhere sort of near 35,400, then that could be the peak. That could be the neckline to the head and shoulders, the return to retest the neck, and then down we go. As you can see, potentially left shoulder, very large head, right shoulder, and then down. So not surprising that we went down. We went down very, very quickly on Friday, and the S&P dropped 1,000 points, which actually was a projected target. But that does not mean that the move to the downside is over. We could still go further. Now, gold, all over the place, actually did respect the levels. It did respect the 38.2% fib at around 1815, 1816. It's not now using the 1800 area as a support or resistance level, really. That's just the midpoint between these two. But you can see, yeah, the resistance at 1816, the support at 1780 are both working. In fact, we retested that support at 1782, 1779 on the Friday close and bounced right off it. Direction-wise, I've got no idea where gold is going to go. It's not benefiting from safe haven status like the yen did and like the dollar did, on Friday. So when the market gets nervous, doesn't know what's going on, traders tend to pile into the yen and to the dollar for safety. So they used to pile into gold. Certainly not the case right now. People think that crypto is a safe haven. I don't think so. Crypto, I'm looking at Bitcoin now, 57.5. Okay, Bitcoin has actually bounced right off my support level. I've been waiting for such a long time for Bitcoin to hit 54,500 down to 53,500. That was my 1,000-point buy range. It hit it and it's bounced off. So I'm really happy with that, especially as Ethereum has been holding its buy level for weeks. So the fact that Bitcoin came down didn't bring Ethereum with it. So both of those look good now. They're having a really strong bounce. But they didn't do that on Friday when everyone was piling into safe haven assets. So again, Bitcoin and crypto is not a safe haven. It never has been. Whenever the stock markets have dumped, they've always actually gone down. So gold now, where do I think it's going to go? Well, it's not going up as an inflation hedge. Those days are definitely not going to happen, as I've said to you for weeks and months. And it's not a safe haven if stock markets collapse. So I think if in the longer term, gold could go down, but those are fundamental reasons. Those are not technical reasons. Well, not much else to add really. Yen rocketed, so Aussie dumped against the yen, Kiwi dumped against the yen. I think the dollar is actually a little bit weaker against the yen. On any bounce, I've got all my resistance levels in the reports. I don't need to repeat those. But certainly the Aussie and the New Zealand dollar were the ones that really collapsed against the yen and also against the dollar. So a bounce back in those maybe would be worth putting on a short position if we hit a strong resistance level, because obviously this COVID thing hasn't gone away. And if it starts to spread, then I assume the markets will start to panic again. We're just sort of in a holding pattern now, waiting to find out how serious the disease, this new strain is. And also we're waiting to see how quickly it spreads. So I would imagine the upside is fairly limited for stocks at this time and also for any pairs against the yen or the dollar. Okay, that's it. Contact me if you need me. I'm always available to help you, and we'll have a chat again tomorrow morning.